Hey everyone, welcome back to Retirement for Life.
Yeah.
Today we're answering a question we hear all the time. Do I really need a financial advisor or can I handle my money on my own? We got a great comment recently actually on YouTube from someone who's doing a lot of things right, good income, diversified investments, and even working with an advisor. But they're wondering if they actually need one. So let's talk about it.
Retirement for Life. Your passport to a comfortable and confident retirement. The podcast that's equal parts education and entertainment, where we break down the retirement maze with a dash of fun and a heap of wisdom from your host, Christian Cyr CPA, the passionate retirement specialist and president of Cyr Financial Wealth Advisors, the independent registered investment advisor specializing in the Aim Retirement System.
Do I need an advisor? First of all, I read the question. There's a lot of disjointed things here. He doesn't understand what a CFA is. Why did he pick CFA, do you think, Emma? Because you're a CFA.
Maybe mentioned in that video, having a CFA is important for the investment side of things, but that's really not the only thing you should be looking for in an investment advisor team.
Great topic. We just had a new client or potential client walk in the door. The big question is there value here? So
Right.
I'm looking forward to talking about it. You know, if you look at this question, I think it really shows most people have a lot of things going on in their life. There's so many moving parts. There's accounts here. There's this idea here. There's this special situation here. I need a tax planner here. I need a estate planner there. You know, this couple that just came in, they walk in, and we thought they were going to be a kind of a simple client.
Yeah.
You know, kind of a 1, 2, 3, let's get this done. And the more they talk, the more that just the onion layers unpeel.
It happens so often too.
Oh my gosh. I think for me, it's a hurdle to get through. People are always focused on costs. And we'll talk about if it's right or wrong for you to have a financial advisor. But like many things, people just have the wrong perspective.
Yeah.
You know, I paid $500 for a driver. It's not this driver, but I paid $500 for a driver. Guess what? I hit the ball so much straighter. I hit the ball so much further. The value I got exceeded the $500 I paid for it. So what do you guys think?
I mean, you get that a lot where you have people saying, similar to your driver analogy, well, I have, a $20 driver that I got from an old friend. Can it do the same thing? Well, the answer is really no. I mean, it can do maybe some of the work, but there's a lot of optimizing you can do. And that's same thing when it comes to an advisor. There's quite a few people, especially the informed people that make comments like this on our YouTube video that think they really have it all under control, but there's quite a lot of value that can be added, even aside from what this guy's talking about, which is his investments, his income. There's quite a lot more that goes along with it, even aside from what he mentioned.
All right, so let me put Andrea on the spot because I love to do that. If you hire a financial advisor, and this is a generic question and a blanket question,
Okay.
so just answer it in generalities. Will you have, by hiring a financial advisor, more money when you die?
I definitely think so.
Okay, so if that financial advisor charged you $80,000 a year or $8,000 a year or $800 a year, does it really matter what the fee was? The real question is there value there?
Right.
And that's really ultimately what it comes down to. I think the sticker shock of a financial advisor is there, but the perception is, what am I going to be after this?
Right.
What is my drive going to do after this? What is my portfolio going to look like after this? There was a quote that I heard years ago, and I still remember it to this day. There was a wise financial advisor when I was just becoming a financial advisor, and I was reading about what it's like to be a financial advisor. And she was in Barron's, back to Barron's, my favorite publication, the old man investment publication, but I was reading it. And she goes, what if this value is 3 or 4 things in your entire lifetime? what if I help you with 3 or 4 decisions in your lifetime? I've always said to my kids, your life will come down to 3 decisions. When you die, you're going to look back and say there was 3 things that drove my life. Hopefully those 3 things were good decisions.
Mm-hmm.
Like I helped a friend in need, or I chose this job over that job.
Mm-hmm.
But what if your 3 things going to the grave were I drove when I shouldn't be driving, I overreacted with my weapon when I shouldn't, whatever. There will be 3 or 4 decisions with your relationship and your life with a financial advisor that will change your financial outcome.
Mm-hmm.
So I don't know. But what about this guy? I don't know if he has everything straight and narrow here. Do you know there's 700,000 advisors in the United States of America?
Mm-hmm. Yep, we've talked about that before. I mean, there's a lot of good financial advisors, but are they all fiduciary? Are they all looking at the big picture?
What do you say when you meet a financial advisor? According to a recent study, the average American feels like they need nearly $1.5 million to retire comfortably. That's a 53% increase compared to the same study just 4 years ago. But is that the right number for you? And are you doing everything you can to maximize your financial situation? The Aim Retirement Assessment can help you figure that out. This free assessment is a simple 3-step process. Answer a few questions about yourself. Spend 15 minutes discussing your situation with one of our retirement specialists, and then we get to work. You'll receive a customized report detailing your exposure to the 7 biggest risks in retirement and the 3 most impactful action items you can take to supercharge your retirement. And if you already have a financial plan, this assessment will help you see what real retirement planning looks like. Get your AIM assessment today and see the difference between a financial generalist and a retirement specialist. Go to aimassessment.com today to get started. That's aimassessment.com.
Well, I mean, we have a whole list of questions that we tell people.
No, I mean, if you find a financial advisor on the street, what do you ask them? I ask them, hey, what do you think about this? What do you think about Roth conversions? You can ask a bunch of questions.
I mean, a lot of them don't look into Roth conversions even.
Whatever. You can just tell who the good from the bad are.
Right. And I think a lot of our existing clients have come to us because they don't know the right questions to ask. And it seems like, according to this comment, it seems very straight and narrow. He's got X accounts here. He's invested in these 4 things. I have my income sorted out. That's all I need. But really, I think there's a deeper level of things you need to be asking and things that you could be optimizing aside from just the investments and the income that an advisor is really going to provide value for you there.
Yep.
How many pages, when we first meet a client for the very first time, today we just did it, how many pages of stuff is there to ask them?
I think there's at least 6 pages of questions.
I think there's at least 6, probably 7 or 8.
Mm-hmm.
I love people on YouTube who give you their full life story and expect an answer.
Yeah.
The answer to this question is, let me spend about 20 hours with you working on you, and maybe I can come up with an answer.
I mean,
they're expecting, what did he say? What's his ask here?
He wants to know if he needs a financial advisor.
Do I need a good man?
Is this a good mix?
Is this a good mix?
And the thing is that as a fiduciary, we have 6 pages or whatever of questions because we need to get to know you specifically, because that answer depends on a lot of other things.
All right, so there's 713,000 registered advisors according to FINRA, 2024 industry snapshot. How many of them are acting, do you think, as a fiduciary? Like what percent? 700,000, that's a lot. That means I am registered with the FINRA organization. I have passed the test.
Is this the guess the numbers game?
No, this is just us talking.
I'm going to say like 30%. It seems it's more popular now, though.
It's growing. You can watch the graphs. It's growing as a fiduciary, but it's 57%.
Okay.
Really?
So basically just over half now are doing some sort of fiduciary, and most of them are not fee only. Most of them are doing kind of like a dual registration.
Mm-hmm.
What percent are CFPs, certified financial planners?
Less than half of that number, so maybe 25% of that number.
What do you think?
I would say less, maybe like 20%.
Yeah, it's 14%.
Wow.
Okay, so I've said it before, a certified financial planner is not the gold standard per se, but if you are interviewing 700,000 financial advisors, what you do know is that if you're working with a CFP, they have gone through some very rigorous testing. They have a great base of knowledge. They tend to be more planning focused than investing focused. And they are abiding by a higher set of standards, fiduciary ethical standards. So if you're interested in looking for a financial advisor, the top thing, I always say level 5 advisor, complex planning. And of people who are doing plans, how many fiduciaries are doing financial planning and basically are doing like 2 or 3 things? Not a lot.
No.
Yeah.
Complex. And then how many of them have a CPA or 2 or 3 on board?
Very few.
Yes.
So what's your answer to this guy? Does he need a financial advisor?
I think so.
We would need a lot more information. I would
Yeah.
say those 4 ETFs maybe aren't the broad scope of all investments you could be in. I don't see any real estate. Maybe that could be something we look
Right.
at, but
The thing is that just because he has this stuff doesn't mean he has a financial plan that's looking at the big picture.
there's so many factors that we don't know that we certainly can't answer it from just a couple 4 sentences of information from him.
Well, okay. This guy, is this the video that we did, level 5 financial planning? What's a level 5 financial advisor? Yeah. Well, it's a good question. It was asked 54 minutes ago. That video came out like a year ago. That means people are watching our videos. That's exciting.
Guess the number game.
Well, I'm so excited for Guess the Number game. I just want to win every single one of them.
All right, Andrea, you want to start it off?
Yep. Okay, so I was reading an
Wait a
article.
second.
Yeah.
Before we start, what is the lifetime score? Let's just
Okay.
say it out loud.
Yeah.
Who's winning?
Chris is winning.
We know why this question was asked.
Unfortunately.
Yeah.
We're going to
What's the
change that.
score? 2 for
Two.
me.
Yeah, each of us got a half.
A half, right.
Because we both answered the same.
Right.
All right.
Which
You
I
can
still
play at home.
think should have been one for each of us.
Yeah, I
I think
agree.
so, too. It's funny how the rules.
Okay, so
spin.
mine, I was reading an article on Kiplinger, and it's how to avoid these 10 retirement planning mistakes. Some mistakes that were alluded to are, do you only have one source of income? Are you planning for health care? Are you planning for inflation? And are you overlooking tax optimization? Okay.
Oh, good.
So,
All stuff we talk about every day.
yes, exactly. So, according to the Employee Benefit Research Institute, what % of U.S. households may run short on retirement funds?
Okay.
Okay, I'm hoping to gain a point here, but
I hope you do too.
he's just going to one-up me, I'm guessing, and I'm going to lose this point, but we're going to remain positive.
Okay, I have my answer, Emma.
Okay. Oh, wow. Okay, mine's 65%.
Shoot!
The answer is 40.
No. Come on. That's no fair.
It's terrible.
Chalk it up. Ding.
We're
Emma.
always spot on of like, we have the same answer.
Yeah, you are
every
always
time.
close.
All right. That's a good one, Andrew. So let's talk about that for a 2nd.
Mm-hmm.
I think it's low. I don't know. 40% of U.S. households may run out of money.
Yeah.
Yeah. You know, it's like the group that just walked in, the family we were talking about earlier,
Mm-hmm.
they made a decision on their Social Security and then went to come see us as a financial advisor.
Mm-hmm. That's backwards.
Why?
Yeah. And you asked that question, and they didn't really know why, other than they needed income. That was their reason. They needed income.
Yeah.
Okay, next question. I'm ready.
Emma.
Okay, so this is from the Investment Company Institute. And so this is a hot topic lately, the average mutual fund expense ratio. So we've seen this going down lately and kind of by a lot for some companies out there. But I would like you guys to guess the average mutual fund expense ratio.
Okay. First of all, I will give an answer, but
Are we talking a percent?
Yes.
Okay.
it's a little bit of a general question because there's multiple share classes, but I'm just going to assume it's all share classes.
This is average of equity mutual funds, all types.
Equity mutual funds.
Yep.
Okay. My answer is the exact same,
On
6.62%.
mutual funds, I just said 2.5%.
Okay, it's 42 basis points.
Yes!
So this is quite a bit lower than
That's actually
we've
very
seen.
low.
However,
Very low.
I will say, how often do we see clients come in with mutual funds in their old portfolio that, I saw one the other day that was over 1.5%. I mean, that's
Yeah.
almost criminal.
Well, and there's some out there that are, 6.25%.
Yeah.
Okay, here's the thing. What did we just say about using a financial advisor? Whether they charge you $1,000, $10,000, or $100,000, are we fixating on fees or are we fixating on the end outcome?
Right.
Well,
For financial advisors, the question should not be how much are you charging me? The question should be, am I ended up? But with mutual funds, I think it's a different story because we've talked about this. 95% of these things that you're talking about underperform.
right.
Mm-hmm.
Why
So
aren't you
in
using
this
an
case,
ETF
you're
and-
paying for something that's not giving you value.
Right. I mean, you
So-
can do something similar for less than that.
Right. So my main point with this is I would say this is probably the biggest argument we see when people come to us and say, I don't really need a financial advisor. I can get, an account that's managed for 42 basis points. Mm-hmm. There's quite a few things missing from that an advisor would do for you. One of those is, managing the different accounts, whether you have a Roth IRA, a taxable account. Is your advisor, is your mutual fund going to help you with the tax efficiency in that account?
Right.
No, they're not thinking about that. A Roth conversion, for example, we do that a lot. We provide our clients with a full detailed Roth conversion analysis and help coordinate that with their CPA. You don't get that with a mutual fund.
No.
Right.
We could go on and on, but there are quite a few things that, they're not included in that cost.
Right.
And we can help you do that for, not that much more expense wise. We're adding so much more value than it costs.
Right.
It's a great point because we're talking about the point of this podcast today is a financial advisor worth it or not? And the answer is it depends. And the question is, what's the end value going to be? But when we were discussing fees, again, I'm going to go back to the meeting we just had an hour ago with a potential client. They're fixated on fees.
Mm-hmm.
And when they hand over their current statements, and if you're listening to this, think, okay, I have a statement. They handed us 3 statements. They were all invested 100% in mutual funds.
Mm-hmm.
And they're discussing, if I go to you, Mr. and Mrs. Financial Advisor, now I'm going to pay this fee. But I said to them, look at your statements. And they had, how many years of statements did he have?
He had a lot. It was a huge binder.
Okay, let's say you had 3 or 4 years of statements. I said, go through 3 or 4 years of statements and find me, with your current mutual funds, find me the word fee. You're not going to find it.
No.
Mm-hmm.
If you are invested in these mutual funds, this is 42 basis points. So Emma just told us that the average fund fee is about 0.5%. You're already paying in these mutual funds. You just don't see it,
Mm-hmm.
right? So it's an important point. It's not like you're going from 0 fees to these big fees. You're paying fees. The difference is now with a fiduciary, you're just going to see the fees.
Well, and with this, what value are you getting for your 50 basis points or whatever?
To Emma's
Right.
point, nothing.
Right.
Right.
Yeah.
So you can pay a
And
little
there's
bit
a lot
more
of things that you could be missing too. Just investments alone. You're just probably invested in stocks and bonds, maybe real estate, but are there things like annuities or, larger real estate investments, things like that you could be invested in that could help your overall returns and help with the risk in your portfolio?
There will be 3 or 4 major financial decisions that the financial advisor will help you with throughout the course of your life, and mutual funds are not going to answer that question for you.
Right.
Mm-hmm.
They're not going to give you that advice. Well, one good thing about me asking my question here,
Is you can't get a point.
I can't get a point. So, and my hope is that you guys tie again,
Yeah, right. That's not
although I don't think you
That
will
should-
today.
No.
Okay, so we're talking about, is a financial advisor worth it? Well, I thought we'd go to the people that we tend to work with, people who have done a good job saving in their retirement. So this is focused on people who are high net worth And high net worth in this definition is people who have $1 million or more of investable assets. So here's the question. According to Northwestern Mutual's 2024 Planning and Progress Study, what percent of high net worth Americans, those with at least $1 million of investable assets, who do not have a financial advisor, what percent of them believe, regardless, even though they don't have a financial advisor, they still believe that they are financially prepared for retirement? I don't have an advisor. I'm rich. I've got $2 million in my account. I feel confident about my retirement.
I feel like we see that a lot. People are confident because they have so much in their accounts that they don't think it'll ever run out.
Okay, so what percent of high net worth Americans who do not use a financial advisor have confidence in their retirement?
I said 60%.
40.
Brooke, what's the answer?
Oh, man.
77%. Now, importantly, we are talking about, do I need a financial advisor?
Mm-hmm.
I have $2 million in my account. I'm going to be fine. I'm never going to spend all that money. Why do I need a financial advisor? Because very likely, like we said, you will have more by making wise decisions, partnering with a financial advisor. And that's why 92% of people who have $2 million in their account feel confident in their retirement because of those decisions that the financial advisor will make. I think it's compelling. And so now, should we say that I have 4 points lifetime?
Yeah.
Do we have to put a handicap on this? Like, should I only
No,
get a half point when I
absolutely
get something
not.
right?
No. Fair is fair.
All right. I'll get a point there. 1.5. I'm coming for you.
All right.
What's on our mind?
So, yeah, I have some stuff on my mind. This is what I'm thinking about today. It's February 2025. And do you guys remember what I said the stock market was going to be like this year?
Volatile. Up and down.
Roller coaster.
Yeah, it has been a volatile roller coaster. This is a picture of the stock market so far in 2025. It's been the very definition of volatility.
Yep.
I still think that the underlying economy is strong.
Mm-hmm.
But as I'm talking to my clients on a daily basis, what are we telling them?
I mean, just kind of hang on.
Hang on.
Yeah, we're going to continue to see the
I
volatility.
mean, the thing is that everyone's concerned. Everyone's saying the same thing, but ultimately everything's been okay.
Yeah, and particular interest to me and our clients is that the next concern is, what is our president going to do?
Mm-hmm.
It is, we've probably had, we've had probably close to 50 meetings already this year, and that topic comes up so much. And so, next slide, Brooke. What I would like to tell my clients, or what I do tell my clients when they're in, we had an episode, which I thought was a great episode, where we highlighted that experts don't know what they're talking about. We highlighted that I think 80% of the experts were wrong in 2024. And then we highlighted in 2025 that if you put all of the experts' opinions together, they basically equal a long-term, diversified, balanced portfolio.
Yes.
So I kind of went back and I was thinking, and I'll talk about Trump and tariffs here in a second, but I was thinking about if we were reading the Wall Street Journal 2 months ago, and have you guys heard, they name it the Trump trade.
Mm-hmm.
What should you be invested in?
So the NASDAQ is on there, and that's
With AI.
That was
AI
supposed to be Trump trade.
index.
Remember what he did? He just paraded out all the AI companies. They're going to spend $500 billion on AI, and everything's AI and everything.
look where they're at, down
AI is
5%.
Down 5% this year.
Yeah.
Okay. Now, there were some things in the Trump trade that so far have been positive. Number one is energy.
Energy.
Energy's up 5%, is it?
Yep.
Yeah, and there's one more on there,
The S&P.
S&P. So the black line on this chart is if you just invested in everything.
Yep.
And that's what you should do. you should not try and guess, should I be in that blue thing right there? Should I be in that orange thing right there?
Yeah.
You should be invested in a diversified long-term portfolio.
Absolutely.
Don't come to me and say, what should we be invested in right now? Because the answer is a little bit of everything.
Yeah.
And if you're looking for a financial advisor to add value, the good ones are not going to be telling you we're putting 40% of your money in anything.
Mm-hmm.
Okay, so this is what everyone's asking, and we'll finish with this. What is the next thing I'm going to predict right now, today is February 25th, 2025, and I'm going to predict within the next 3 days you will hear a large announcement from the Trump organization. I'll tell you why. We've had, as we talked about, volatility in the stock market.
Mm-hmm.
Have you heard anything in the last week or two from Donald Trump?
I mean, we've heard a little bit about tariffs,
Yeah.
as always, and that makes the market go up and down.
There's going to be, I predict a big announcement for him, and it's going to be something that's going to be positive, and you're going to see the markets go back up.
Yeah.
We have been up this year. Bonds are up 2%. Stocks are up 2%. It's been a volatile ride. We think it's going to be a good year because the underlying economy that's what it's all about.
Mm-hmm.
When you hear the word tariff, I just want you to think of a gun with a trigger, okay? The tariff talk is the gun, okay? Pulling the trigger is a different thing. You can convince somebody 9 times out of 10 to do something you want to if you are pointing a loaded gun at them. He's got the bullets in his gun.
Mm-hmm.
He is the president of the United States of America. He can do pretty much debatable, but he can do a lot. Okay? These tariffs, when you hear the word tariff, don't get worried.
Yeah.
Don't get upset. Did you see now they're stealing eggs and putting them on the black market? That's the latest black market thing. When you hear the word tariff, don't get nervous, okay? Just know that it is his weapon of choice right now. He's getting countries to do what he wants. Are there some tariffs coming up? Yes. Is he trying to level the playing field? Yes. But I think the most important thing that we should be paying attention to, if we want to know what's going to happen in this economy this year, is inflation and interest rates. And that's what we should be paying attention to. So, big picture, focus on a long-term diversified portfolio. Don't try and guess what's going to happen. The market might go up for 5 more years in a row. It might go down next year. It might go down this year. Long-term thinking is what it's all about. Don't get afraid about some president saying this is going to happen. We've had presidents in this country for over 200 years, and we've always been scared about what they're going to say and what they're going to do. Focus on what really matters. Do I have a job? Am I able to afford the things I want to?
Yeah.
Is my family employed? Are we starving? You know, these are the things that matter. So 2025 will be, I think, as we predicted back in January, a fairly decent year.
Yeah.
Just get ready for the Great American Eagle,
Yeah.
the roller coaster that was built out of wood, the Great America, Six Flags Great America in Gurnee, Illinois,
Yeah.
back in 1976.
Say another one that probably only us remember being on.
Well, you date yourself, it's okay. Anything else for this episode today, Brooke?
No, I don't think so. Good
All
job.
right, thanks.
Yeah.
Investment advisory services provided by Cyr Financial Inc., SEC registered investment advisor. All content on this podcast is for information purposes only and should not be considered investment, legal, or tax advice. Material presented is believed to be from reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness.